Yo, what's up, guys? This is Juan Pablo and Lewis from 100%finance.com. What's up, Lewis?
What's up, guys? What's up, YouTube? What's up, Facebook?
Yeah, so we're doing the dual cast right now, Facebook as well as YouTube. So if you guys haven't seen this on Facebook, you can go to facebook.com/100%finance. And for those of you on Facebook, if you haven't caught our videos on YouTube, check us out again at 100%finance.com. So what are you talking about today, Lewis?
So today we're going to be going over zero down real estate investing. So how to get real estate, how to buy properties without having a mortgage, without having any of your own credit or cash tied up.
And what do you mean by deal hierarchy?
So deal hierarchy, or the hierarchy of structuring, is basically there are different ways to acquire properties. We all know that. But certain ways gives you more benefits than others. And in one way, you could have more control than others. So what we're going to be talking about today is control without actually owning the property. How you could actually make money without owning the property. And how you can make money without having any of your cash tied up. If you want your cash tied up, by all means, go buy the house. But for those of you who have little cash, like how I started off, and very bad credit, how I started off as well, this could be a great way for you to purchase real estate and start acquiring assets.
So speaking of which, how did you start off? And where are you at now?
In terms of
credit, capital, and where you're at now in regard to assets.
Alright, so when I first started off, I had zero real estate, zero assets, zero income producing assets. Let me emphasize the income producing part. And my credit was below a 600. I was able to get my credit up to a 767.
Damn!
Hey, using 100% Finance's credit repair program. And if you want to take a look at that, the link is in the description below. The other thing is, right now I have 16 rental units in my portfolio. And I was able to acquire that over the last 3 years. But really, I really acquired all 16 over the last year and a half. Because the first year and a half, I was learning the business, figuring out my market, which is Syracuse, New York, and which is in upstate New York, of course, and just figuring out like how to do this business, you know. And I was started off primarily doing wholesaling, and which is what I'm going to talk about today. So doing deals with zero down and bad credit. We all got to start from somewhere. And here at 100% Finance, we teach you how to do that. So the first deal structure type is called a subject to. You may have heard of it, but subject to stands for subject to the existing loan. You're purchasing the property subject to the existing loan or the existing lien. So someone could have a mortgage on a property, and you could go in there and purchase the property from the seller, keeping the seller's mortgage in place or their loan in place, but the title will be deeded to you. Now, this gives you so much control as the buyer because your name is on title, like you own the house. So this is not really control without ownership because you actually own the house now. Now, I know many of you are thinking like, who would do something like that? Who would keep their name on a loan and give you the title to their house? Well, think of it like this. I'll go over the pros and cons. The pro to this approach for you as the buyer is you own the property. So you can do whatever you want. You could sell the property off, you could rent the property, you could lease the property out. So that's the pro. The con is some banks may call the loan due to the fact that the mortgage and the mortgage and the deed are two different entities or two different people. So the seller, the mortgage is in the seller's name, but the deed is in your name. So if the bank finds out about that, they may or they can call it the loan due. They never do.
Due on sale clause.
So that's the due on sales clause. But they never do. The only time I've ever heard of them calling it due was when the mortgage wasn't being paid. Banks are in the business of collecting your money because of interest. They loan you money and for rent, like pretty much, and they charge you interest for it. If you don't pay them, they're gonna come and they want the money. If you're paying them, everything is fine and dandy. So subject to, you're taking over the property subject to the existing loan that's in the seller's name, and it remains in the seller's name until you get rid of the property. Now, the next deal structure type is a land contract. This gives you less control than the subject to, but it's still a good amount of control. A land contract is an agreement between you and the seller, you as the buyer, to purchase the property at a later date. It's basically an installment sale. So you'll get the property under contract, it will go into a land contract, and once that loan has been satisfied between you and the seller, once you finish paying them off, then it automatically goes into your name. So that's the benefits of having a land contract. The pro for this is you have more control. You can still sell on a land contract. You can sell the property on a land contract. You can sell the property as a lease to own. You can rent the property out as well. Now, the cons to this approach is if you don't pay the seller, then the seller could pretty much foreclose on you. They can't evict you, but they can foreclose on you. So they'll have to go through the process of foreclosing and whatnot. Same thing as the subject to. In that case, with the subject to, the reason why this is so powerful is because the seller actually can't do anything to you. And I let all my sellers know that. But the people that actually want to do this deal is because I'm their only option. Like they have to do a subject to. And so for the subject to, there's no foreclosure, there's no eviction. If you don't pay the mortgage, the bank actually has to foreclose on you, not the seller. So the bank is the one that's taking the action. Land contract, the seller is taking the action. Now, let's go to lease option. This is the easiest way to make money in real estate right now. And we show you how to do that. We'll show you how to make your first $3,000 within the first month or two if you're lazy. But if you follow our steps, within the first month, you can make $3,000 using this system. Lease option is basically you're going into a property and you're going to the landlord and you're getting into an agreement with them saying, I want to rent your property and buy it at a later date. So rent to own or lease to own. So you're renting with an option to buy. Now, renting to the option to buy, once you get into that agreement, the pro is you have some control because now that seller can't sell to anybody else. They can't lease to anyone else. Well, you have to use our contracts, or you have to use the correct contract or the correct agreement. But with our agreements, they cannot lease it to anyone else. They cannot sell it to anyone else. They're selling it to you. And let's say you enter in a 2-year lease agreement. They can't sell it to anyone else or lease it to anyone for the next 2 years. And that's the pro. The other pro is that you can turn around and rent that property out or lease it to someone else. And I'll talk about that right after I talk about the next hierarchy. The con to this approach is you can't sell that property. So because you bought it on a lease option, you have no right to sell the property because you're leasing it. You can only lease. So the hierarchy is like this: sell, lease, rent. If you have an option, if you have control of the property to sell it, then you can sell to someone else. If you could only lease it, you could only lease it to someone else or rent it. Now, the last option is an option to buy, which is what most real estate contracts are. When you have a purchase agreement, it's really an option to buy that property. And what you can do with that is, this is how I started off, and some people coin it as wholesaling. You'll get a property under contract with a seller, let's say for $50,000. You'll turn around. Now that seller, the pro for this, that seller can't sell it to anyone else for the terms of your agreement. Usually I ask for 3 months in all my contracts. So for 3 months, that seller cannot go to anyone else. It can only sell to you. Now, you got to work your butt off. You have 3 months to find a buyer that's going to buy it for, if you're a good business person, higher than $50,000. So it's up to you. Normally, I usually make anywhere from $3,000 and up on wholesale deals. So you'll get under contract for $50,000 and you'll want to sell that contract off to a buyer for $55,000. So you'll make the spread. You'll make that money in between. You'll make that $5,000. I talked about the pro. They can't sell it to anyone else until your contract with the seller expires. The con is you can't lease that property out. You cannot. You can't sell the property either, because remember, we're selling our contract. We're not selling the house. We're selling the contract. So you can't sell the house. You can't sell. You can't lease it. You can't rent it. You can only sell your contract. Now that's the 4 hierarchies of doing a zero down real estate investing. And one thing I'll touch on briefly is seller financing. Seller financing and subject to are very closely related to each other. Actually, subject to is a type of seller financing. But normally, when you ask for seller financing, you're going to have to come down with a down payment. That down payment is not going to be as much as the bank is asking for if you're a good negotiator. But it's still some money out your pocket. So what I advise to all the students is we start them off with lease option if they have no money, no credit. Start off with lease option because that's the fastest way for you to make any money. With lease options, you get paid upfront, you get paid a monthly spread, and you get paid on the back end. And once you start amassing a bunch of lease options and start building some working capital, then you move on to buy and hold. Now you can start buying properties for yourself using seller financing. So check out the link in the description if you're interested in 100% Financing's monthly coaching calls and monthly group coaching calls. Just check the link in the description. I'll have all the details in there, and we'll hope to see you on either the next webinar or either on the coaching call.
Oh yeah, speaking of which, the webinar. How can they sign up for the webinar?
So for the webinar, it's very easy.
And what's included?
The webinar is a free webinar, and I know that everyone isn't in Atlanta or LA or Dallas when we're there. So what we decided to do was people have a lot of questions, and people want to see the content and want to know what we have to offer at 100% Finance. If you want to join the free webinar where you can ask your questions and learn more about business credit, business funding, credit repair, and also real estate investing, just sign up in the link below or head over to 100% Finance and look for the button that says webinar sign up. Click the button and sign up. You automatically get registered, and we even give you 2 free documents. One talks about how to obtain business credit and business funding for any of your businesses. It doesn't have to be real estate related. It's a free, we'll give you a free estimate as long as you fill out the application. And the other document we give you are the 6 tools that Juan and I use to build our portfolio. Juan has 63 units of his rental portfolio right now. Is that correct?
Cha-ching.
Yeah, cha-ching. I'm catching up, but I'm going to catch him soon. I have 16 rental units, and these 6 tools helped us throughout the process. One of them includes our deal analyzer, which I think, to be honest, I would sell it, but Juan wants to give it away for free. Because he loves the 100% Finance community. But check it out. That's a really great tool. What do you call it? The deal analysis?
The buy this or not property.
Buy this or not deal. The buy this or not
Property spreadsheet.
So it's an analyzer that analyzes. There's a sample analysis.
It's more so the cash flow analysis.
Yeah,
for
so
a
it's
buy and hold strategy.
So it's a buy and hold strategy, cash flow analysis, and correct me if I'm wrong, there's an example in there already of a 50-unit deal, correct?
For those who subscribe to 100%finance.com, they'll see a sample deal analysis of a 50-unit, 50.
So if you subscribe to 100%finance.com, or if you sign up for the webinar, you would get a sample of a 50-unit spreadsheet that we've done. So it goes through the whole analysis from the beginning to the end of how to think about repairs, how to think about buying this, how we ask for seller financing. So there's a lot of information in there, and that's why I would sell it. But Juan, he crazy. But anyway, check out the link in the description, and we'll see you on the next webinar.
Excellent, guys. So if you're watching this live on Facebook, I'll place the link to the webinar by Sunday. Okay, so just give me time. And YouTube guys, I will post the link below.
And if you're already in our email list and subscribe to us, you'll be getting an email of this webinar in the email. So check your email.
Right. So make sure you subscribe to 100percentfinance.com because you get a ton of free documents, not just real estate, but credit repair and business credit. So those are the things we'll also be discussing on the webinar because we want to help you. That's our mission at 100% Finance, providing you the tools you need to succeed financially. So thank you, Lewis, so much for your time. I greatly appreciate it. Any final words you have?
Yeah.
About 20 seconds.
Earn passively, live passionately. That's the motto. Let's see the shirt.
That's it, baby.
That's it. That's what you got to do. And that's what we teach people to do. Start getting assets. That's the only way that you're going to survive in this economy. Get assets. See you later.
All right, peace.